Generic AB Q4 2025. Generic came out with a disappointing Q4 report. Shares declined almost 15% to 40 SEK per share. Looking at the report, top line grew only 3%, whilst earnings was severely down due to increased OPEX. The gross margin saw continued strength and was now 43.6% compared to 42.9% last year. The gross profit saw an increase of 4.8% compared to last year. As said, the reported numbers were disappointing, but we need to put the numbers into context. Last year's Q4 was exceptional, where revenues grew 24% and EBITDA grew 66%, so the comparables was quite difficult. Looking at some of the positives, the improvement in gross margin and increased gross profits is important due to the investment thesis. In a nutshell, Generic is gradually turning into a software-as-a-service company with higher margin recurring revenue. They want to become a more integrated partner with their customers, where their products are embedded in the daily businesses of their customers. This will be positive for the company over the long term. However, the company is struggling to grow the top line was doing this transformation. The important SaaS product Docs continues to grow, and now 78 municipalities use the product compared to 52 last year. This is stellar growth of about 50% and leads to stronger gross margin. Looking at the cash flows, cash from operations was 12.6 million compared to 7.6 million last year. The strong cash conversion this quarter was due to a strong reduction in accounts receivable. The company also announced an increased dividend from 1.6 per share to 1.75. Okay, so moving on to the negatives. Of course, the top line was disappointing, not necessarily due to the revenue growth, but because of the slow increase in gross profits of only 4.8%. I'm okay with slow revenue growth, as long as the quality of earnings is strong. However, I would like to see growth in gross profits above 10%. As said earlier, the comparables for the quarter were strong, so I might be a bit harsh in my assessment, but it seems that the market agrees that the growth was too slow. Furthermore, the quarter saw a large increase in OPEX. Personnel costs grew from 7.4 million to 8.8 million. This includes a one-off of 0.7 million, but still, the growth is higher than the increase in gross profits. This is not what you'd like to see. Moving down the income statement, we see that EBIT declined 11%, with an EBIT margin of 19.7% compared to a margin of 22.7% last year. Looking ahead, management guides for increased operational costs, where they will strengthen the organization. This is not a negative in itself, but last year the former CEO stated that it had invested in personnel in order to grow for the future. In the past year, they have not grown revenues too much, but are still looking to strengthen the personnel. I would rather see the company growing and then investing after demand. You might say that it's hard to grow without investing in personnel. This is not always the case for software companies like Generic. Moving on to some negatives. I don't really like the communication from the new CEO. She's been around for less than a year, but early signs are not the best in my opinion. The former CEO was excellent, and trust in management is very important in small cap companies. It's important to have confidence in that management works for the shareholders' interests. Many CEOs might want to focus on growing the organization without worrying about the earnings per share or the capital efficiency. It's still early doors, but I don't have enough confidence in the new management team to increase my position despite the poor stock performance. Lastly, I will look at the valuation. The company is cheap. The market cap is 492 million at a share price of 40 SEK. The enterprise value is only 434 million. This is compared to earnings of 31 million. The enterprise value to EBIT is only 11. The company has very strong cash flows and a lot of cash and no debt. They could pay a much larger dividend if they wanted to, as the free cash flow yield is nearly 8% compared to the dividend yield of 4.4%. The problem, though, is that I don't know what management will spend their cash flows on. I don't know what return the investments in the business will yield for the shareholders. The CEO does not own a lot of shares, and I don't love the communication towards the shareholders. A lot of cash might be spent on growing the business, higher OPEX, without growing earnings per share. In this situation, I can't increase my position despite my belief in the company. Lastly, I really like the business of Generic and would like to increase my position. The stock is quite cheap at 40 SEK per share. However, I won't increase my position before I get better confidence in management. I would need better communication, insider buys, or simply more quarterly reports with better results. Until then, I will hold my shares. Thanks for listening.